Welcome. In this video, we will analyze XCN versus ARB, which is better, and can XCN increase by 300%. Don't forget to subscribe, like, and please watch to the end to understand.
But first, let's analyze the XCN. One of the most notable structures on the chart is the classic technical analysis pattern known as the W pattern. This pattern forms when prices decline for a period, establish a bottom at a certain level, then recover only to fall again and form a second bottom before moving upward once more. Typically, such structures indicate that the market is entering a recovery phase and could be showing one of the first signals of a possible trend reversal. In this context, the clearly forming W pattern on the chart under analysis can be considered a highly promising structure for investors. The first leg of the pattern begins with intense selling pressure in the market, causing the price to fall quickly to a certain low. At this level, as selling pressure begins to subside and buyers start to step in, prices begin to recover upward. This recovery is generally referred to as the correction following the first bottom. However, the market is not yet fully strengthened at this stage, therefore the recovery remains limited, and a second downward move leads to the formation of the second bottom. It is precisely at this point that the characteristic second low of the W pattern forms. This second bottom may be near the first one or slightly higher or lower. What matters is that the market begins to regain upward strength from this area. As seen in the current chart, the price is located in the second bottom area of this classic W pattern and appears to be preparing for an upward breakout from this point. This breakout is critical for the completion of the pattern. A strong and decisive upward move starting from the second bottom not only increases investor confidence, but also confirms that the structure is a valid W pattern. If prices can sustain this upward movement and break through the resistance that aligns with the peak of the first recovery, known as the neckline in technical analysis, the target of the pattern is typically projected to be as far above the breakout point as the depth of the pattern. In this framework, observing the price beginning to recover from the second bottom of the pattern is an extremely positive sign. Especially if this reaction is accompanied by strong and decisive volume, it indicates that the price is turning upward and aiming to complete the pattern. If the price maintains this momentum and continues its upward movement, it could reach the neckline in the short term and potentially the target level in the medium term. Such structures are also among the factors that directly influence investor psychology. The W pattern offers a particularly critical opportunity for investors considering buying from the bottom. This is because the second bottom of this pattern is typically where investors begin to believe the market will no longer decline and start to gain confidence. As a result, strong buying activity following the second bottom drives prices upward rapidly and signals the beginning of a new trend. Based on the current structure on the chart, this expectation appears quite valid. The price has begun rising from the second bottom, and from this point forward, the key factor is the sustainability and decisiveness of this upward movement. Especially if the resistance level known as the neckline of the pattern is broken, the technical formation is confirmed and upward targets come into play. In such a scenario, the price could reach the levels where the formation began and potentially move beyond them under favorable market conditions. This situation is also linked to the volume balance formed between the start of the formation and the second bottom. If there is an increase in volume during the upward movement from the second bottom, it shows that market participants have started to buy again and that confidence has been renewed. This development supports the continuation of the upward move. Therefore, both the integrity of the technical structure and additional indicators like trading volume should be closely monitored. In conclusion, a clear W pattern is visible in the current chart structure, and it is believed that the price holds significant upward potential if the pattern is completed. This pattern, which is technically strong, could lead to notable price targets in the medium to long term if completed. Investors should take this structure seriously and build their strategies accordingly to seize potential profit opportunities. However, we can't base our analysis solely on this. Let's also take a look at other metrics. Stay tuned.
I'm interrupting the video for a moment, friends, because Bittunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you'll receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description. When we carefully examine the chart, we can clearly see the formation of a technical structure known as the cup and handle pattern. This pattern is frequently encountered in technical analysis and is widely regarded as a highly reliable structure among investors. Currently, the price appears to be in the handle formation phase of this pattern. Cup and handle patterns are typically seen as precursors to a larger upward movement following a consolidation period. The primary characteristic of these structures is a period of decline followed by a recovery.
the price action first forms the cup, which is broad, rounded, and characterized by decreasing volume. Then, a relatively smaller pullback begins, forming the handle. The current price behavior aligns with the construction of the handle. This indicates that the price has encountered short-term resistance but is gathering strength to overcome it. The small decline or sideways movement during the handle phase is actually a precursor to a strong recovery. From a technical analysis standpoint, the formation of the handle is very important. A properly formed handle indicates that the price is setting the stage for a renewed upward move, giving investors confidence. When the cup and handle pattern is completed, meaning the price breaks above the resistance level at the end of the handle, the target is typically the distance between the cup's lowest point and the resistance level. Therefore, the potential upside can reach quite satisfactory levels. For this movement to occur, the breakout must be supported by strong volume. Volume represents the driving force behind the price action. In other words, it's not enough for the price to merely break resistance. Buying power must also increase for the breakout to be meaningful. If these conditions are met, it becomes technically likely for the price to reach much higher levels. In addition, the time frame in which the pattern forms is also very important. Cup and handle patterns formed on daily, weekly, or monthly charts can signal much stronger and longer-term uptrends. Patterns formed in shorter time frames typically point to faster but more short-term targets. The current pattern seems to have developed over a medium-term time frame, which indicates the potential for a significant price increase in the coming weeks or months. For investors, this represents a period filled with major opportunities. The reliability of the cup and handle pattern has been proven historically through numerous examples. When examining movements that followed this pattern in both traditional financial markets and the cryptocurrency market, it is clear that significant price increases often occurred. The success rate of the pattern is quite high, but as with any technical structure, there are inherent risks. These include situations where the pattern breaks down before completing, or the price falls back to the cup's bottom phase during the handle. In such scenarios, it is very important for investors to manage their risks using stop-loss orders. At present, the handle portion of the pattern appears to be nearing its final stages. The current price action suggests a final consolidation phase. If, after this consolidation, the price breaks upward with strength, it can be assumed that the pattern is complete and a move toward the target has begun. Since the size of this move would match the depth of the cup, it could result in a significant upward movement. From a technical perspective, such patterns have typically led to price increases of 100 to 300%. In the cryptocurrency market, these figures can be even higher. Furthermore, the context in which this pattern forms also matters. If the overall market outlook is positive and upward movements are being seen in major coins like Bitcoin and Ethereum, the patterns seen in altcoins can perform much stronger. Market psychology is a key factor at this stage. If overall investor sentiment is positive, the success rate of these patterns increases. In this context, not only technical data, but also macro market conditions should be considered for the pattern to work effectively. The price may be currently moving near the lower edge of the handle, which can serve as an early opportunity signal for investors. Moves made at this point can offer a favorable risk-reward ratio. However, caution is still needed when entering trades before the pattern is completed, that is, before the resistance zone is broken. Such trades are typically suited for aggressive investors. More cautious investors may choose to wait for the breakout and volume confirmation before entering, thereby following a more conservative strategy. In conclusion, when the cup and handle pattern is completed and the price breaks above the resistance level, the target is assumed to be at a level equal to the depth of the cup above the breakout point. The likelihood of this target being reached in the medium to long term is quite high. Of course, volatility in the cryptocurrency market is very high, but historical data shows that such patterns have triggered significant rallies. The current handle phase of the price action is the final preparation stage before this move. At this point, investors should plan their positions carefully, implement risk management strategies, and be prepared for the potential volatility that may occur at the moment of the breakout. If the price manages to break the resistance level with strong volume, not only will the technical target of the pattern be triggered, but market psychology will also further reinforce the upward move.
In the cryptocurrency market, it is quite common for projects to shift positions, market capitalizations to change, and investor interest to move toward different projects. In this context, one of the recently notable projects, XCN, the chain token, has started to attract the attention of many investors. At the same time, the question arises as to whether it can replace a well-established Layer 2 solution like Arbitrum, which already has a large market capitalization and user base. Although these two projects serve different technical purposes, it is natural for investors to compare them in terms of market cap and growth potential. These comparisons are important for understanding potential returns. Now let's take a detailed look at whether XCN can truly replace ARB, and could this result in a roughly 300% price increase? Numerically speaking, ARB's current market cap is approximately 4 times larger than that of XCN. This means that if XCN were to reach the same market cap, its price would need to increase by about 300% or 4x. While this kind of increase seems very attractive to investors, achieving it depends on a variety of factors. First, XCN would need to develop technically, gain investor confidence, and expand its ecosystem. The advantages offered by a Layer 2 solution like Arbitrum have driven many DeFi projects to adopt it. Arbitrum's transaction speed, low fees, and broad developer support make it a standout among Layer 2 solutions. As a result, the ARB token is not just a speculative asset, but also one with real-world utility. For XCN to reach a similar level, it must develop an equally strong use case or even stronger. However, the chain protocol's target audience, enterprise clients, may not be as visible as individual investors. That said, this doesn't mean the project lacks potential. Large institutional deals, strategic partnerships, and protocol upgrades could significantly boost XCN's price. If the chain team can make the platform more transparent, accessible, and user-friendly, it could become more appealing in the eyes of investors. Competing with projects like ARB is not just about technical capability. Community support, exchange visibility, social media impact, and marketing efforts are also crucial. While Arbitrum has a large community and strong PR, XCN may need to increase its visibility in these areas. Growing interest on social media, a rising number of investors, and listings on major exchanges could all boost XCN's price and awareness. Is it possible for XCN to increase by 300% and reach the same level as ARB? Theoretically, yes, but practically achieving this would require time and the right strategies. It's important to acknowledge that this won't be easy. Especially when compared to a project like Arbitrum, which already has a strong ecosystem, XCN has a longer road ahead. Still, it's not impossible. In the crypto world, we've seen many small-cap tokens rise to the level of larger competitors, or even surpass them. What matters most is having the vision, technology, and community structure to support such growth. Also, from a technical analysis perspective, the fact that XCN is currently trading at lower levels could indicate a strong potential for future upside. For long-term investors, projects with low market caps can yield high returns if held patiently. Therefore, XCN, like some small projects in the past, may have the potential to enter a strong upward trend suddenly. In conclusion, while it's quite challenging for XCN to grow as large as ARB and match its market cap, it is not impossible. If this scenario does unfold, XCN could potentially experience a price increase of around 300%. However, reaching this goal would require technical development, community building, strategic partnerships, and earning investor trust. Market conditions, the overall crypto climate, and investor psychology are also key factors that directly influence this process. XCN's current position may indicate that it is still in a phase where its full potential has not yet been realized. If the right steps are taken, it could reach a level where it competes with major projects like ARB. However, this process will take time, and it is crucial for investors to be patient and strategic along the way. Before investing, it is always important to analyze the project's technical details, roadmap, and team, as these form the foundation for a sound investment decision.
Yes, friends. I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.